Hello, hello. Welcome in, everybody. I saw Tiana Hubbard. Hello. Nice to see you in the chat there. I got your chat message before I even saw anyone was on the live stream. So congrats on the first message of 2025 on the AI Circle. So happy New Year, everyone. This will hopefully be the last time I have to tell anyone Happy New Year, but I think we're getting to the point where it's weird if you say Happy New Year to someone else. But I haven't seen you guys in a while, so Happy New Year. Hope you guys had a great holiday season. As you're all aware, this is our first AI Circle of 2025. We've got a couple changes to go over in the smart folios. I know we talked last time about the new smart folios that are coming. We'll get into that as well. Obviously, we'll go through the market update and kind of what's happened since we last spoke. But with all that being said, we've got to get Kelly in here. Kelly, how's it going today?
Happy New Year, everyone. It's going, it feels like the year is starting off very heavy with work. The markets, of course, are not doing the same, but Happy New Year, everyone. I missed everybody from the last 2 weeks of the year. I hope everybody had a great Christmas and New Year's.
Yeah, I'm sure there's a lot of jealous people if they can see that you're in a short sleeve shirt. I'm sure we have a lot of friends that are bundled up and freezing right now, and you and I are in pretty decent parts of the world. I can just say that. Well, before we get into anything else, our favorite part, we got to get the disclosure, this disclaimer out of the way. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure the iFlip smart folios you select are suitable for your investment profile before trading in a live brokerage account. I kind of said this verbally, but this is some of the stuff we'll go over today. Obviously, the market update, talk about what happened the last couple weeks of 2024, and then what's happened in the weekend-ish in 2025. The main thing I will probably spend a little bit more time on than anything else is maybe the Vector portfolio, which is the new one. And as always, we'll have the Q&A portion at the end, and you guys are always welcome to get those questions in sooner rather than later. And Tiana, I'm seeing your message. I'm sorry. She said, "Don't rub in the weather." Well, anywho,
I'll do it,
Kelly,
don't worry.
yeah, right. Kelly, if you want to share screen, let me get that going for you. And I don't know if you want to start with 2024 or if I should just shut up, but I'll let you take it from here.
Well, where do we begin? Well, let's start it this way. Look, everyone out there, again, Happy New Year. Here we go again for the first AI Circle for 2025. 2024, let's talk about this first. Obviously, it was a very good year for the market. The year-to-date numbers on, if I were to just look at any of them on the, for example, S&P or anything else, we were up around 22% or so in the S&P. The Dow Jones actually didn't do, sorry, I'm clicking the wrong thing. The Dow Jones ended up actually, interestingly, the way it closed the year was kind of on a dud. I think by the time the year was over, the S&P was only up, or sorry, the Dow Jones was only up maybe 10% on the year. It really fell off towards the end of the year. It was up as much as almost 20, and it came back. As you can see at the close of the year, we didn't have the Santa Claus rally. That being said, we did not have the same kind of sell-off in the S&P or the NASDAQ. This is the NASDAQ. NASDAQ, again, is within shooting distance of all-time highs, which is approximately just over 20,000. So it was a remarkable year for technology stocks, in general, the broader market with the S&P, and to a lesser extent, the myopic old legacy index called the Dow Jones Industrial Average, which, by the way, is no longer anything like the Dow Jones Industrial Average that was originally created. It used to be industrials, General Motors, Ford, General Electric, and now U.S. Steel. None of those companies today, of course, can even possibly even be in. They're lucky to be in the Dow Jones. Sorry, the S&P, let alone the Dow Jones. And so they've been replaced by all kinds of other stocks, some that are mostly technology. That's why the Dow has a big technology spin. That being said, the year was a good year. What do we expect for 2025? I'll get into it. Here's what I expect. I expect volatility. Why? Most pundits out there will say the same thing, but it really boils down to Trump and the volatility he creates with tariffs. Trump will use tariffs as a weapon to maneuver America into a better bargaining position with a lot of its allies and also some of its supporters and even protectorates or territories, like Panama now. So even though it's neither, but it is a significant thing. The use of a tariff is inflationary, number one. It is a detriment to both countries. One, the country you levy it on, and the country, that our own country, where we have lack of goods, that now our goods will cost much more money if we're buying those very same goods that are being imported in at higher tariffs. So we both pay a price. Trump did this before. If you remember 2018, I remember Christmas of 2018, only 6 years ago, believe it or not. And we were there, and Flip was there, and the market sold off 20% inside of 2 weeks. And I remember it bottomed literally on Christmas Eve. It rallied and recovered a month later. The good news is it recovered very quickly, which I expect will also happen under Trump in 2025. But it didn't mean that we first didn't go down 20% so quickly, and it scared, obviously, all investors enormously during those 2 weeks. However, that does create buying opportunities. I actually like that, especially with the way we do business here. Quick moves down are often beautiful, using Trump's word, beautiful ways to re-enter a market that we might not have been participating in, that had gone beyond our price threshold. So volatility is actually kind of good for us, but know that it will still be there. The overall performance of the portfolios at the end of the year, I don't have that information specifically why. It will come out in the next AI circle when I tally the numbers and verify them. But know that generally the aggressive did best, the balance did not almost as good as the aggressive this last year. And the conservative did pretty well too. I think this conservative was up over 10%, 11%, and that's a conservative portfolio. And the reason for the individually, of course, in the aggressive and balanced, it was things like the ownership of NVIDIA that helped a lot. We have All Plains America, Energy Transfer in almost all portfolios. They continue to make new highs. In the conservative portfolio, again, has a large mix of those energy kind of products that pay the dividends. That's why they're in the conservative portfolio. But they're also in the aggressive portfolio and balanced only because their price appreciation has been extremely consistent over literally the last, literally since COVID. So I'm going to go quickly jump to those. Let's look at Energy Transfer. Energy Transfer by the end of the year was up over 32% itself, not including the 8% dividend it paid during the year, which means net Energy Transfer was up, and this is the year-to-date. Well, we can't do the year-to-date now because we're in the new year. But if we went back to the beginning of 2024, you'll see that this stock was up literally. We'll just do a quick review here. Here it is. It went from basically 13 to 19 area. There it is, 2nd of January of 24. It was at 1376 area. Now it's at 1971. So it had a great year. And but remember, it's paying these dividends, which are hiding behind there. And you notice they're paying 30 cents a share 4 times a year. It's on $17 at that time. And earlier in the year, they were paying the same, take a look, the same 31 cents earlier in the year at the cheaper price. So we like these stocks. I have been saying for the last 2 years, I think The price target on these are $22 to $24 a share. We still have some room in them, and they're going to go higher. That's my opinion, and that's why we have a disclaimer. Let's take a look real quick also at All Plains American. Look at that today. A huge jump up over $1 on the day. Also to make almost a new high, very close. We're 25 cents off a new high. Same thing, the same story. These are competitive companies. They're friendly to each other. They pay the same dividends, the 31 or 31.5 cents, 30.5 cents per quarter. And so we love these stocks mostly because they're paying a dividend. We generally hold these stocks. We're not trying to buy and sell here. We want these for dividends. That's why they're in the conservative portfolio and the larger positions. If we look at the main thing, though, that is a problem in the market, we are hearing about it all the time, and it is a headwind. It's the 10-year note. The 10-year note is around 4.68% as of today, and hit 470. These are problematic for the future of the stock market. 4.7 on a 10-year note is a very attractive competition to the US stock market. Why? Because there's no risk in, well, unless the country goes under, over the next 10 years, if you have a guaranteed 4.7%, what's wrong with that? I mean, you have $1 million. If you have $1 million, it makes it easy. You know you're getting paid $47,000 a year on that million for the next 10 years, and then you get your million back 10 years from now. That's pretty attractive because you know you will get it. There is no ifs, ands, or buts. Well, Congress, sorry. So this yield will end up in the 10-year note, which if it's going down, means interest rates are going up. Sorry, I have to repeat that. But it offers stiff competition to the US stock market because it is the risk-free alternative. That's very important. We also must note the dollar. Well, the reason the dollar has become so strong over the fourth quarter of 24 and remains strong this year is because our rates are high relative to a lot of places around the world, and we're guaranteed. So if we have high rates here, a good stock market, people want to own US dollars so they can invest them in US bonds and US stocks. That's why the dollar has become so strong. It's mainly done this literally at the expense of the euro. The euro is down at 103, which is, frankly, I remember when it came out at par over 20 years ago, and we are basically there. The European economic community has not really thrived. And over the last number of years, their debt has increased even more than ours. Our increase in the debt is mainly a result of COVID and the administrations that existed mostly during COVID, which is the Biden administration and to some extent the Trump administration. But the rest of Europe was already in trouble prior to COVID in terms of high debt limits. And literally, you running deficits for years and years that were unsustainable. Europe is a mess in many ways. How it gets out of it, I don't know. I definitely like being long the dollar. And it's not about being king dollar. It's a good trade. And there's a reason why these markets are going up. And it's mostly economic, and it's driven by our fiscal and monetary policies in America. I got to talk about the Mag 7. Let's just, again, a lot of today is going to be a review, but also trying to be a little bit clairvoyant about what we're going to get into expect in 2025. And I'll get to that quite shortly. Mag 7, we all know they were good years. Here's Apple making a new high by the end of the year. It's come off the high. Fine. No big deal. Google, even the same. Google looked awful for a while, and somehow it recovered by the end of the year to make new highs. Meta has been as consistent as you can get. It looks a lot like All Plains American or Energy Transfer, except it's a technology company, social media specifically. But look at these, just look at the performance here. I mean, it went from $350 a share basically to $600 a share, up almost, 80%. Will we get that this year? I don't think so. I'm looking more along the lines of 10 to 15. By the way, that's my overall bet for the year. I expect the S&P 500 to be 10% plus or minus 3. So that's where I think it could be by the end of the year. The reason I feel that way, just briefly, is that Donald Trump is not coming in to a great economy. He is just not. There are problems everywhere. There are new expenses that are going to have to be paid. It's a lot cheaper to allow, for example, people in the country illegally than it is to remove them from the country legally. So we're going to bear a huge expense there, and we really don't know the extent of it. It is completely unknown, and it's going to be a function of how many people we want to get out of the country that are here illegally, and that's going to just cost. There's going to be a cost per head of removing people from the country, and that is going to hurt the country economically. NVIDIA, we'll just jump to that one. Made a quick new high at 152 or so, came back to 140 just over the last 2 days. I think this stock has more to go, but most pundits now believe that this has pretty much had its run. Revenues are actually decreasing as a function of price, and overall price earnings ratios across the board in the S&P 500 are very rich. And we are extremely high multiples, around 32, I think. And these are just, most people would say unsustainable. In a previous time they were, but we are not in a previous time anymore. Hold on, I noticed my video has stopped. I'm going to reset it. Give me 1 second.
I noticed that I could hear you just fine though. I was going to let you.
Yeah, the voice works. You have to change the resolution sometimes, and then it goes. I don't know. It's the software we use. I think you should.
Yep, you're back.
Wonderful. Therefore, instead of I'm not just frozen and talking.
Just don't get frozen with your hands above your head like you just were.
Okay.
Go ahead.
All right. We'll move on. I noticed that oil, I think, just again, this is partly to review what's going on beginning of the year. Let's just assume we came into the year with oil definitely above $70 a barrel, came in around 72. We're at $73 a barrel, down $1 today. Big deal. Oil's general trend is down. And one of the things, and we'll get into this shortly again, about the new portfolio, Vector Plus, by the way, about the theme for what we expect, especially over the next 2 years with this new administration. That's one of the reasons we called it Vector, because I think we are on a vector to know what this new administration is going to try to do and what industries should we be in, given what we think they're going to do. And so one of the things we definitely know is, we've all heard this a million times, probably for 10 to 15 years, drill, baby, drill. And we know that means that we will be very friendly to oil companies, and we will want them to literally pump as much oil as possible out and bring down the price of oil yet further. Interestingly, politically, we have more production today, even at the end of the Biden administration. Only on his way out did this administration decide to say, hey, we're going to have a cheap oil policy, because they allowed the drilling to occur when they saw inflation was higher. The problem it's one thing to bring inflation down, but what about the prices that went higher? Not so easy to bring those down. They're sticky. The only way to get them down is to make the costs of getting them on the shelf, so all these products on the shelf, cheaper. They get on the shelf with energy, oil specifically. If you bring it cheaper, it's going to be a lot harder for two things to happen. One, for the delivery costs to be yet higher. So therefore, that means the people that work in these kind of industries to deliver products, they're not going to be able to command higher salaries, really. Because guess what? Their costs are going to be less. So that means that there's an effect on the union side of this as well, which is what we saw before in the early 1980s, when we saw something called wage price inflation, which means prices went up, well, the wages have to follow and go up too, to allow the people that are bringing products to us, they have to eat too. So we have to make sure that when prices go up like this, we have to understand that there's a huge segment of our society that does need more money to be able to do their jobs and be able to feed their families. And that's really important. And it's not just a social thing, it's just an economic thing. And by bringing the price of oil down, it is fundamentally the best way to gnaw away at the higher prices. That's the only way they will come down. That's exactly what happened in the 80s. Prices of bread and eggs and things like that went up. And then over the years, and it took many years, they started to come down where they became competitive again, because all the other costs were now very reasonable. In other words, delivery costs, packaging costs, maintenance costs, insurance costs. We have been bombarded, especially in 2024, with these higher costs literally all around, all across the board. It's not just the grocery store. I'm sure all of you have known, and I'm marginally off topic, but all of you know our insurance costs are higher. Our mortgage insurance costs are higher. Our car insurance costs are higher. So many other things. I mean, my electricity costs out here in Phoenix are much higher, literally 40% more than they were at COVID. And somehow I think we all would agree that there's some unreasonableness here. That why did the prices go up 40% here and there and the other places, and yet they say inflation is only 20%. But we see the 20% because that's what we see frequently at the grocery store. But what we don't see is those insidious things like our water bill, our electric bill, our mortgage insurance, if we have it, our taxes, property taxes. They've gone up all around the country as a result of poorly run government. It's as simple as that. Okay, we're going to quickly go down and move past all this. Let's take a look at some of the things. Let's think about what is going to be the theme for the next 2 years. Well, first of all of you should take a look at the Vector Plus portfolio. What the Vector Plus is a portfolio that is going to concentrate on things like land that produces income. So we'll start with what kind of land does that? Well, any land that you need to drill for oil or run a pipeline or generate electricity or build a data center or provide water has a value.
Kelly, real quick, sorry to cut you off, just because you brought it up. So like Kelly just said, the portfolio is called Vector Plus. If you're looking for it inside of your account, when you go to the invest button, it's under the additive smartfolio section, and it's right in the middle between Bitflip and Red Oil. Not that you guys couldn't find that on your own, but just so you know where it is. So go ahead, Kelly.
Thank you for pointing out where it is. Thank you. But what's in it? So the things that I think that are going to be prosperous put aside the math, put aside machine learning, put aside algorithmic trading, put all that aside. All of those things are wonderful and they help manage risk, but that doesn't mean that if you pick a stock that's not going to go up, or even if it goes down, so I don't lose money, but I allocate money towards it. If I don't make money with it, what's the point? Right? I have no risk. Maybe I have no risk, but I'm not making any money. That's a problem. So where do we think the money will come from? I think the money is going to come from companies like, I'll give you an example. Here's CrowdStrike. What is CrowdStrike? I think a lot of you know this is a company that had a big problem recently. Remember, there was a data breach at Microsoft. All kinds of computers couldn't get online. Well, they're the company that actually they're the company that literally protects their software from hacking. Well, they got hacked. What happened to their stock is it was about a 385. It went all the way down to 200. Clearly, it was a great buy down here, but it's already marched back up. One thing is for certain, going forward, we're going to have more and more data in our lives. We use it more every day, and the generations to come will even use it more. Companies like this are not going away. They're going to expand and get larger. I wouldn't be surprised to see this stock literally double from here in the next 2 years. I would not be surprised at all. We want to own things like this. These are not exactly that, and they're also insensitive to the stock market. Stock market goes up or down. These services still need to be provided. You can't provide less of security, and you might be able to provide less security guards, but you can't provide less security. The company may not grow as much, but it will insulate itself to some degree, I think a larger degree, against downside volatility in the future should the stock market have troubles in the next year or two. So I like stocks like this, and that is in Vector Plus. Here's another one people don't know a lot of. I keep clicking the wrong thing sometimes. This one is called the Digital Realty Trust. Basically, say you want to build a data center. How do you do that? I mean, you find land. You need a lot of land. You also need about $3 billion. So you need land, you need capital, you need electricity. These things take up a lot of electricity. You have a lot of electricity, you need cooling. Where do you get the water for the air conditioners? It becomes actually very problematic. These are huge buildings, and all they contain is computers. In a way, they're almost like a military base. They're very unobtrusive buildings. If you ever look at Google picture of a data center, you'll see they're not things with windows. They look a lot like a phone center, you know, a big building with no windows. It's just a block to house computers and switches. Same thing. This is a company that makes them. In other words, they're who you call this company, Digital Realty Trust, to say, hey, I need to build a data center. And they do the turnkey for that. They talk to government and do it all. Here's another one I like, LandBridge. LandBridge is a newer company. It has a sister company, Texas Pacific Land. And what these companies do is essentially they're REITs. What's a REIT? A real estate investment trust. Basically, again, I want to own the land. And this is towards that theme. Companies that own a lot of land, if you want to drill a well, it's not like ExxonMobil owns all the land that they drill on. They make a lease agreement, a long-term lease agreement with these kind of companies to say, hey, let me drill on your land for oil. I'll give you some of the proceeds. I'll give you a monthly rental, et cetera, et cetera. And they make a deal. Obviously, they're kind of the picks and shovels of the industries that are trying to use their land to enrich themselves. I like these kind of companies. Again, if you own land, that becomes extremely valuable, especially in the new world I think we are going into. Pardon me, Aldous Huxley. Finally, here, I'll give you another one, a weird one that a lot of people don't know. This one, it used to be Monster like the drink, but this is actually MicroStrategies Incorporated. What it does, it's a very kind of interesting company. It's basically Bitcoin. A lot of people don't understand what this stock is. But if Bitcoin goes up, this goes up. They have a different take on it. You may or may not like it. There will be a small allocation to this along with Bitcoin in the Vector Plus. And what this is a different take on Bitcoin. I'll explain it, but it requires research. Ultimately, what they do is they sell a zero coupon bond, and they take the principal of the bond. Sorry, they take the interest payments of the bond, and they buy Bitcoin with it, and they keep the principal of it for future return of capital. Now, if you really think of what that is he's actually borrowing money to buy Bitcoin, but he's keeping the principal. So that means all the money can always be returned at the bond. The bond's principal is guaranteed. But when you buy a zero coupon bond, what you're really doing is you're buying it at a steep discount because the coupons have been stripped. You're not going to get paid an interest rate on it over the period of the zero coupon. Generally, my understanding is these are 5 and 10 year zeros. If you know about what a bond is, and intricacies of how a bond works. It's actually a very novel idea. I like it, and I think a small allocation should be towards it. It will expand greater than Bitcoin if Bitcoin goes up. And of course, on the downside, it could go down disproportionately, asymmetrically, if the Bitcoin goes down. So for example, if it goes up, it'll actually go up on a multiple of Bitcoin. But if it goes down, it'll only go down with Bitcoin. They call that an asymmetric return. And that's the reason they use the zero coupon bond. This is something that if you want to get deep into it, have a deep discussion, then it requires research. I recommend, if you're interested in something like that, do it. This is the Peter Thiel company, Planetary. You've heard of it. You're going to always hit. It's interesting. We got a lot of mixed reviews on it. The owner of this company is a very embedded Republican. We had a call recently from Morgan Stanley saying they'll bring this stock back down to $60 a share. I think it belongs more like 120. But there's various numbers out there. But 120 seems to be more of the consensus. JP Morgan is not known for their best job at doing research, but I'll still got to point out that that's what the research has said. And it has come off from 80 down to 68, just $12 off, or $15 off its high. It looks to me more like a bargain than anything else. We will own some of that. Stocks that will kind of lose favor this coming year to me are going to be AT&T. I like it, but I liked it more for the dividend. I think it's had most of its run. It's a little bit too old of a company for me to feel that there's a lot left in this. I think we will be looking, if the system doesn't get us out of this, we will be getting out of this and replacing this with something that's more interesting inside of any portfolio this exists in. And that includes, and you'll see these in your aggressive or balanced or conservative portfolios, you'll see some change of stocks over the next week or so. We've already been changing some of them, but you'll see some more changes soon. You'll see little things show up in your email saying we bought this or sold that. This company here, Texas Pacific Land, is a company just like Landbridge. It basically does the same thing. Had a magnificent run up. It was up, one of the biggest performing companies in the year. It went from 480 to almost 1,800 a share, but then it essentially crashed in the last month of the year, from 1,800 area all the way down to 1,100. It's a huge drop. It's recovered since then to around $12.75 a share today. I like this stock. I think it goes higher. I especially like it here because now we know where the lows are. We know that if I'm a computer or even just a trader, I would be risking the lows here at around 1,100 a share. So these are going to be the changes that we're going to see. Oh, finally, before we get into some Q&A here, everybody, we might as well just quickly go down to Bitcoin. I'll do it right here. Crypto, Bitcoin. All right. Well, the main thing in 2024, Trump came in prior to the election and said, we're going to make Bitcoin the capital of the year, or the U.S. the capital of Bitcoin development in the year. So that occurred. I'll tell you when it occurred, right about there, early November, right in here. I remember when he was saying it about a week before the election. And it was at about 65,000. It ran up 35,000. Literally went up 50% since Trump made that call. And it went to $105,000 a coin. It has since moved down to 90, call it 90. Well, it closed at 95,000. Honestly, everyone, I think the lows are in for this. I don't think we're going to see ever again 60,000 a coin. That's over. I think we want to be a buyer of Bitcoin on dips. We now know there is a government aligned behind it, and it is the most powerful government in the world, at least America. I still think of our country that way. And it's really kind of hard to stop something that has grown so much. There are so many end users, and there's end users not just here, but all around the world. when it all comes in and some of the other larger funds and fund managers decide to add it to their portfolios, we all know the answer, that there will be a huge demand for Bitcoin. And if that's the case, where is the top? My numbers are showing somewhere, and my numbers based on worldwide GDP, I can go into it, but I won't. It's messy. I see it around $330,000 a coin. That's where I see it. When maybe over the next 4 years, by the end of this administration, it should be there. All right, everyone. I think I've kind of gone through it all, Lee. We might have some Q's and some A's.
Hopefully we've got some A's because we've got a couple Q's. The first one, let me just get rid of the screen unless you need it again. So Debbie had a couple questions. First one's more back to like when we were talking more energy and oil and such, but said when we drill as much as possible and prices come down, how does that affect companies? Would that bring their value down?
How does that affect which companies?
Say an oil company, say a Chevron or
let's look at.
I think it's natural to say, hey, if oil is cheaper and they can't sell it for as much, how are they going to continue to make money type, or how are they going to make as much as they have type thing?
Very good question when you think of it that way. First of all, if you're an oil company and your product becomes cheaper, the only way therefore your bottom line, your revenues will become less, assuming constant demand. But if demand it goes cheaper, generally, depending on the elasticity, which is a word some of you guys might know, of the demand curve, we would see how much price would change because of the reduced demand. So in the case of an oil company, oil companies may have less revenue per barrel, but guess what? America was an exporter of oil, not an importer. America has all the oil we need for our own country. We don't need oil from Saudi Arabia or Russia, the other major producing oil countries. So for our companies, I do see some price appreciation of stock prices like ExxonMobil, and even to some extent my All Plains American and Energy Transfer companies having a headwind in one level, well, especially Exxon, because the price is cheaper. But some of that will be made up with increased demand, right? Because the quantity demanded will be higher based on the elasticity curve of demand for oil if oil is cheaper. On the other hand, for a company that needs oil for a shipping company, all of a sudden, guess what? Their expenses are lower. If their expenses are lower, that means their profits are higher. So all things being the same there, those companies will have an advantage. So I still, though, that being said, I want to remind the person who is it, Michelle, that asked the question?
Debbie,
that it's like, I still like the reason I'm in pipelines more than anything else is because the pipelines are just about the flow of oil. They get paid on the flow, not the quantity. So if there's more flowing, they get paid more money. And if, by the way, if they can drill more, that means more companies can make more oil. Oil will go down. I expect we're going to see, under $2 oil throughout the country on the national average sometime in the next, it could even happen in the next year, because it's an easy mandate for this government to do to reduce the price of oil. And I think, by the way, we all know that, and it's kind of explained with why would All Plains American, for example, rally $1 to its all-time high, or almost its all-time high, knowing that oil is going to get cheaper. We all know oil is going to get cheaper. So I think the dynamics are set that we can have our cake and eat it too, in terms of the pipeline companies and every other company that has oil as an expense. Clearly, they're going to benefit.
Definitely. Another one from Debbie said Trump has announced foreign investors in the Trump has announced foreign investors in the U.S. to be the forerunner in AI. How will that play into portfolios or the market? Go ahead.
what Trump is trying to do there is, if we're going to be the forerunners of AI, what he's doing is he's getting like SoftBank, Mr. Massa, to be able to make large investments in this country towards our AI infrastructure. The companies that are going to benefit for it were the ones I just went through, which are the DLRs, the land bridges, the Musabi Trust, companies that are going to be part of an AI revolution. And so, but I don't want the AI company itself. I want the infrastructure for the AI companies. I'm no longer interested in the NVIDIA. I'm interested in, where do they build these data centers? Where do they get the water? Where do they get the electricity? If we all know that it's going to come, we're going to need both U.S. local investment, domestic investment, and we're going to need foreign investment. He's already gone out and raised, oh my gosh, Sam Massa of SoftBank, is over $10 billion. I mean, that's the largest and best investor in the world, going to put their money here because they know we're going to be friendly for them to open up and make contributions and investments in data centers and the companies and infrastructure that build them. So my theme is exactly that. That's where I think the money will be made, especially over the next 2 years. And remember, the vector is that right now the Republicans have control of Congress. And if they have control of Congress, sorry, everybody wants you. I should have had the phone off. The country right now has the control of Congress, does rest with the Republicans. If they want to pass the right bills, they're going to pass things that help people get jobs, better jobs, and increase their payrolls and the monies that they earn. And they need foreign investment from that, especially now more than ever. And I'm glad Trump is doing that. That's exactly the right thing to do. Let's get everybody to contribute to investing in America.
Yep. And on a slightly different note, I mean, we saw what the impact that AI had on a company like NVIDIA last year, different than the data center side of it. But I think it's proven that to your point, it's the vector.
It's the vector. And keep in mind, right, we've already seen the run in the companies that actually build the technology that is needed to make things faster. I have a personal experience with NVIDIA GPUs, and I can tell you that the things you can get out of an NVIDIA GPU are rival the Cray computers that we had just 15 years ago. Those Cray computers were considered the fastest and best in the market. Now, with 3 NVIDIA cards, you essentially have a Cray computer. Yeah. Think of that. The GPU power is it's mind-boggling. Yeah. But I think that story is old now. Sure. That story has been played out. The new story is now that we have it, where do we put it and how much of it can we build? How can we use it the most?
Perfect.
That's the story.
Carol and Tiana kind of both asked the same question, but they just, first of all, welcome. They said they're new here. Who can help me get started with iFlip, and can I speak with someone? So there's 2 links in the chat. One says the demo scheduling link. That'll go to my calendar. Just pick a time that works well for you, and I can walk you through things. If you do want to get started on your own, there's also the create account link down there as well. You're welcome to try it on your own, but we're obviously happy to help if you have any questions as well. I think there was another one from Sarah. Can I only use iFlip with my Roth, or can I use it for independent investments? Also feeling super behind with Bitcoin, the best resource to learn more. I'll answer the first part of it. You can use iFlip in your Roth. It doesn't have to be, though. You could have a brokerage account, corporate account, trust, joint, etc., self-directed IRAs. So there's a lot of account types that we can do. Roth is obviously great for the tax reasons and how we kind of do things and try to skip the dips. That if you miss 5 dips over the lifetime of an IRA, you're going to be pretty happy, I think. So basically wherever your money is, we're set up to be able to help you, whether that's retirement dollars or not. Kelly, do you have any resources to maybe learn more on Bitcoin
Well, I was just thinking of that. I knew you were going to save that part of the question for me. When I see something I don't know about, um, obviously the first thing to do is you Google it. So we can Google about Bitcoin. And I will tell you that if you Google Bitcoin, the first thing I do is start with the history of something. Who made it? Satoshi. But it's best to kind of understand why he did it, when he built it. So, like, if you read a book, when I read some book, any book, the first thing I like to do is learn about the author. When did the author live? What was the author's life like? What was the author's, ideology? What was his politics? All those things make a difference in what someone puts onto paper. And so the same thing is true. If you want to learn something, you start with basics. The first thing is a Google, get it, and the Google will generally guide you. For example, today I have to learn something about a new kind of machine learning in using a product. In my case, it'll be something called Cat Boost, Category Boost. It's written by a bunch of Russians. It's extremely complex. I wish there was a Cat Boost for Dummies book, but there isn't because it's so specific. But honestly, start at the very basics. Don't try to understand what is happening today. Understand how it came to be up till today, because you won't understand where it could go today if you don't know how it got to where we are now. We must understand the history of something in order to understand its future. And that is, by the way, interestingly, that question is the whole concept of what iFlip Investor is about. iFlip Investor looks at historical information and it tries to learn from it. Look at all the combinations that the historical information gave us that showed us the reason why there was a price of General Electric in 1973 on August 3rd. And then we know what August 4th was. And then we try to use ideas in mathematics and learning, machine learning, to say, why is the price of General Electric today, it was $3 then and now it's, $78. Why? What is this company? Why did it evolve? How did it evolve? So you first must learn the history. So my place for you to start is, there's no book here I can give you, but I recommend highly you start at the very basics. Know who made it, why they made it, and learn about how it was made. That is simple reading, and you'll get that on a wiki, because the wiki for Bitcoin is extremely in depth. So I would therefore recommend that. But I would also recommend learn about this Satoshi guy too. You might find that there's value to that.
Well, there's a lot of rabbit holes you can go down in the crypto space though as well, right? You might learn a lot of things about a lot of stuff that you don't know how to comprehend. And you kind of said it at the end, but if you're trying to learn about it just to be able to invest into it, Kelly kind of said it, but that's what our system's kind of designed to do. You don't need to go learn everything about Apple to be able to invest into it. And Bitcoin's no different. But again, some people want to learn about these things, and I think it's obviously here to stay. And why would you not want to learn more about something like that?
I agree. And by the way, I have to anecdotally point out that when Bitcoin first came out about 4 or 5 years ago, before it was getting popular like it is now, I was very much against what the concept of Bitcoin was. I was trying to figure out, was this just horse manure that you could trade? I mean, you could trade anything and make it valuable. We saw that during COVID with the meme stocks, where we're seeing companies that are literally bankrupt trading for $70 a share when they should be zero. So that means anything can be traded. If there's enough buyers and sellers, you can trade anything. But fundamentally, if you look at those companies today, now they're priced to perfection, and they're not priced at $78 a share. Bankrupt companies are bankrupt. Yep. They're zero. But I thought the same thing of Bitcoin. But once you start to understand things about its limited supply and its use case, you start to see, well, wait a minute, there could be a use for that. And then if you put around that kind of the demographics, the geodemographics of what the world looks like today and what it'll be tomorrow, I can tell you as a person that is in his 60s, me, realizes that the world that will occur after my lifetime is going to be a lot different than the one that I lived in. And that new world will have a cryptocurrency that may very well be the very first worldwide currency. And if it is the very first worldwide currency, I could tell you this, it's going to be worth a lot more. Yep. A lot more.
All right, we've gotten a bunch of questions in the last couple of minutes, so I'm gonna cut you to like 1 minute answers each. Okay. Just so we're not here till midnight. I know you have things to do as well. All but right. Greg asked, do you see iFlip being bought by a bigger firm in the near future? That's all relative, I guess, but I don't know if you have any insight you want to share on that.
I do. I think another financial services company might come in, either to buy our technology one day, or to buy our, the most important asset we have, which is you customers, people that come to our platform and use it. Obviously, any company like ours that has technology, it has a presence, it has a database, has a value. And, we're here to service what we think is an important direction for investors to take to kind of control their own finances. I think that there is a movement towards that. You guys are all representatives of that, saying, hey, I don't know how to do it. I don't trust all these guys with a fancy desk to do it. Let's just see if a computer can do it. And by the way, it can. And, yep. And it does in your case. And so, yes, I do see it as an acquisition target.
Cool. Back to some of the vector stocks. Sarah's asking, are you recommending investing directly in the REITs that will own the land that lease to the data centers?
If you buy the vector portfolio, you'll get elements of all the things I talked about of what I think the direction that fiscally that the country will take over the next 2 years under Donald Trump. The reason we named it vector is because Trump is a person that signals what he's going to do. He is telling you what he's going to do. The only thing that will prevent him is Congress. And right now he has all of Congress. It's thin margin, of course. But if he's telling you he's going to try to lower oil prices, and he wants to have crypto, and he wants to have new investment from foreign people in America, foreign companies' interest in America, bring industry home, then that a lot of that industry is technology. So I put together a portfolio called Vector Plus, which has each and every one of those kind of things in it that would prosper under a Trump administration. The land part, anybody that owns land, the only way you can make money on it is by leasing it out. That is why I called it a REIT. They're not REITs, but I called it that because what else is land for? What else do you do with it? You lease it. If you do nothing with it, it's just land. But as soon as you put something on it, now you have a chance to make some money. And that's what these companies do.
Yep. All right. Kelly, do you know the percentage of Palantir and Vector off the top of your head?
It'll probably be more like between a 5 and 8% allocation. I think I've only got about 10 or 11 things in there. So therefore, I always start off with an equal allocation. And then after that, what we do is we optimize every quarter.
Perfect. Every op, if my self-directed custodian isn't on the list, can I still work with your company? Maybe, it depends. In case you weren't here earlier, I'm gonna put my scheduling link in the chat again. We'd need to know who it is and honestly, if they even want to work with us. But we're just seen as another investment inside your self-directed IRAs, how they kind of look at it. Carolina, does the iFlip account have to be a retirement account, or can one open a regular brokerage or business? You could do either of them, brokerage or business, retirement, all of those work. Phyllis, does the IBIT fund have shares or does it have shares and an ETF? So the IBIT is an ETF. Correct me if I'm wrong, Kelly. It's the iShares one,
Yeah.
right?
The answer is IBIT is an ETF. It's an exchange traded fund, and only thing that IBIT owns is Bitcoin.
Yep.
IBIT gets money when you buy IBIT. You buy one share of IBIT, $50 or whatever it is a share, $53 a share. They will turn around and buy 53. They're the most efficient there is. They'll buy almost $52.95 worth of Bitcoin.
Yep. And Phyllis, what may be confusing because she's bringing up 50%, like the BitFlip Smartfolio is 50% IBIT, 50% IBIT. So 50% of it is buy and hold. The other half is managed by the AI. So
I think you're right, Lee. I think that's where Phyllis is going. She's wondering, right? I think you're right, and you're right, Lee. Yes, the IBIT, the BitFlip portfolio always has 50% in the product. It will always hold. It's buying and holding IBIT. The other 50% of the money is trading IBIT periodically to say, hey, because IBIT's very volatile. We want to try to trade the volatility to avoid the downswings.
Right.
Try to buy the momentum of it. That's this approach of the BitFlip product. Try to hedge your bet of owning IBIT.
Yep. So in my layman's terms, it's it's exposure to Bitcoin theoretically with half the risk, because if it's going down 20% and the AI says not to own it, then you're only 50% invested.
Right.
Well, there's a lot of questions to filter through. Kelly, why don't you find your best or your favorite one? Just because we haven't done this in a little while. So the Q&A, in case, I know there's a few new folks in here, but every time on the AI Circle, we give away a $25 Amazon gift card. How you win that is Kelly's going to pick a winner for what he perceives as his best question that was asked tonight. And the only qualifications is you just meet. Oh, there's a typo here. You must be an iFlip user, not use, and then use a Smartfolio. So whoever our winner is tonight, we're going to have you email mailbag@iflipinvest.com, and then we will respond to you with how to basically redeem your gift card. So Kelly, do you have a winner?
Yeah, I'm looking at the questions. I'm looking for one in particular that we had earlier.
I think I know which one it is, but
can you? Yeah. I like the question from Debbie. The question that is questioning that if you make oil very cheap, wouldn't that make the price of like ExxonMobil cheaper? I think that's where she was going, and and she's right. The way I answered it was, hey, if it's a part of your income, it depends on the elasticity of the demand curve, but also depending on if it's a revenue side or it's an expense side. So I like that question because it's the first question you should ask about when you see something on a broader national level occur. Cheap oil. Wouldn't you think the oil companies would go down? And my answer was, depends on the elasticity of the demand curve, and maybe supply, the greater supply that they pump out may overcome that. Right. In the case of a company that uses that for revenue. So let's give it to Debbie McKinney.
Perfect. Debbie, congrats. You're our first winner of 2025. So I'll put up the slide again. So again, just email mailbag@iflipinvest.com and we'll take care of you there. Kelly, any final thoughts or any lasting remarks? We've been on this for about an hour now, so thank you guys for all sticking around.
Yeah, one final thought as we close in on a whole hour. Final thought is, please expect understand to expect some volatility as the new administration comes on board. The tariffs that Trump will wield will cause volatility. Volatility means the down moves, but I expect that these kind of down moves will ultimately recover, but they could be sharp and quick, and that's always scary. So expect the volatility as the world realigns, and so does our economy, to Donald J. Trump.
Perfect. I know last time he was in office, people were worried about the tweets he was sending. So he's got something with the T words,
Well,
tariffs
he
and
doesn't tweet
tweets.
it. There's no more tweeting. It's texting, I
No,
guess.
I know. But well, awesome. Well, again, thank you guys, everyone. We'll be back in 2 weeks on the 22nd, I believe it is. Let me double check that. That doesn't sound. Yeah, it is the 22nd. I was questioning my own math. So same time as always. If you didn't get a question answered tonight, just start off the next one and ask it right away, and we'll be sure to cover it next time. So have a great rest of your afternoon. Enjoy the 2025, and we'll see you in a couple weeks.
All the best, everyone.